Helps if I turn that thing on, right? Okay, happy Tuesday. Welcome to Guest Captain Interview. Trying to make sure I've got Jonathan in the room. There you are.
Yeah, I'm here.
Yeah, you know.
It's a busy day.
Lots going on. All right, I don't have my webinar on. Nothing's here. Let's do this. There I am. Hey, everyone. Happy Tuesday at the close. Guest Captain Interview. Let's see if you can see a little bit of screen sharing here, which is,
All right.
tell me if you can see that, Jonathan.
Yeah, I can see it.
Yep. All right. Strangely, I just see me. I don't see the screen. Do you got the screen or both or what?
We can see the main macro to micro power.
Okay, we'll do that. All right. Yep. So for those of you who are new, thank you so much for hopping in. We are going to be doing a quick bio. First, I am LaDucTrading.com, founder and also CIO of LaDuc Capital LLC. As you can see, I put together these webinars with guest captains. If you notice my website, LaDucTrading.com, there's a fishing theme, if you will, and we like to go fishing for good macro trend ideas as well as trading setups. And I run a live trading room. I also offer clients brokerage-triggered trade alerts and my macro to micro analysis in the form of newsletters. Jonathan is a colleague that has a fabulous app, which is a fintech product specifically to help traders at all learning levels, especially for option traders. I find that there are some phenomenal tools to augment what we're doing. And we're going to talk and go deep dive into his tool today. Last time we talked about gold and volatility and the dollar, and China. We definitely have a theme each Tuesday. This time we're going to go into, let me just make sure I can get this present. Ooh, that's me again. Twitter. It doesn't matter. Jonathan, share your screen, your VigTech screen, because I'm challenged here with too many tabs open. Show your product page real quick, and we can do a little bio so folks are familiar with you and what we're going to be discussing today.
All right. You got to stop the share, and then I'll...
Oh, yeah, that deal. No, you're panelist. You can take it. Go. I'm going to turn this up.
All right. Can everybody see my screen?
Yes.
Q right here. Okay. So just real quick, everybody, our app is able to be found at bigtech.io. All right. And you'll see that this app is here, in mobile form and on the web. Basically, our app is for investing on all different levels. Okay, so you're going to be able to come in here if you're an explorer, somebody looking to invest, or if you're an active trader who's actually looking to kind of get market indicators, or just an investor who's looking for maybe some signals to monitor things, to watch your back. All of our products are broken down on the product suite. So basically, it's a single app, it's a single download, and then you can purchase anything in the in-app purchase component for the App Store or on the web. A lot of the products and tools are free, so that anybody can use them, especially the learning and the tutorial components. And then a lot of the advanced stuff like the charts and the options lab and the indicators and our kind of algorithm bundles and things like that are all available for you in VSpace. So VSpace is kind of the first investing marketplace where we've built different algorithms or different features or different products that you can subscribe to, different channels like options lemons, doing unusual options activity. We've got some other stuff, cool stuff coming in here soon. I'll leave that there. And with some very talented people in the industry for some signals. And this is meant to be kind of like a Netflix type environment for the next generation of investors, where you can kind of fit things to an application as you see fit for your own style and your own journey. We have the Juice, which is our daily kind of musings about the markets and kind of referencing the application. And then we have a whole learn section that goes into different posts. We have guest posts from guest guest writers, and then we have an entire knowledge base with 1,000+ articles about investing. So that's a really quick high level thing. You can get it at bigtech.io, download it on the App Store by visiting just Apple App Store and then type in bigtech.io and go from there. So jumping right into it, do you want to jump into the actual market itself and start talking about some options?
I do, because one of the things that we talked about last week was trying to spy in advance the single stock, gamma option flow that is building. That, I mean, I'm sitting in front of the computer in my live trading room. I can see where, accumulation is brewing, but it would be lovely to have a one-stop shop kind of area as well, where we can see that build up versus, just this by the time it's already erupted. So that was one thing we were going to talk about today, and the market structure of this grinding higher euphoric move that we talked about last time. You deem it the equity nirvana.
Mm-hmm.
What is your flow telling us? Are we getting into the danger zone yet?
Well, what I would say is I mentioned this yesterday. Let me pull up the article from the Juice. So basically, I mentioned 5 things. You got volatility. What's that doing? Do we see anything moving in volatility? The indexes. What are the reactions at the new highs? Internals, are those rolling? Are they not rolling? What's going on with the Russell? Right? What's going on with small caps? And then what's going on with the dollar? And we've been talking about this for some time. We both thought that the dollar would go lower.
It has.
It has gone lower. Don't think that that's done yet, but I think it's getting closer. Volatility, like you kind of address them one by one. Volatility today, if you look at VVIX closed green, VIX closed green, VXX closed green, UVXY closed green, everything closed green into green indexes. So that's like checkbox number 1. You always look for that. The Russell, from the Rona Day cure, right? I used to call it Rona Cure Day. That's my joke. About 3 weeks ago, that has been weaker than growth, tech. So that is another checkbox. Indexes are accepting these new highs. And I want to talk about that in a second, why. And then you can look at gold and silver, and are those out of the woods, right? In the conjunction with the indexes going to new highs, are we going to inflation, right? And then look at the levels. And I'm not going to like shamelessly plug the app right here. I'm just going to use the app to kind of talk through what I'm seeing. And then we can kind of dive into like the kind of the conversation we usually have about it, because
I don't think it's a shameless plug. The reason why I do this on Tuesdays with you is because it's a fabulous utility, and the Juice, your commentary, almost daily commentary, is not only disarmingly funny, but again, I make it available for my clients because we see eye to eye on so much of this.
Yeah.
And but coming from totally different approaches. I mean, your secret sauce and my, multidisciplinary approach of just scanning and synthesizing lots of different silos, if you will, of technical and intermarket and macro and sentiment and fundamental and quant. But you have, and I have come to the same conclusion to short gold and silver and miners and the dollar. And it's kind of interesting how we have approached the markets with a different filter, and we come to the same conclusion. So that's cool to me.
Yeah, absolutely. And there's a lot of coalescence of different things happening at the same time right now that you just kind of filter through. It helps, when you got these. We were talking the other day about the tools that you use and the way those indicators work and things like that, and trying to kind of merge those with what we're doing, and then to offer it to more people is really an excellent prospect. So. And in the works right now. So when we look at this right now, I think the biggest driver across the entire board, we track. We have a options flows product inside the app. So when you're inside the app, you just look on the left-hand panel and it's options flows. And this is not necessarily like looking for, there's a lot of options stuff out there for sweeps and things like that. This is more of just tracking the entire options flow order set coming through the markets and really filtering out just kind of the small lots and looking at large lots. Anything over $20,000 is roughly a premium lot. So it goes way up, tracks everything up to 5 million and so forth. You'll see a lot of different tabs come in here in the next couple of weeks. And then our our unusual options specialist, options limits. He'll have his own tabs. You can track his type of reads and formulations for that stuff in here. But when you look at this, and what's been staggering to us the last 10 days is the single stock gamma, right? Impact. And if you look at this right here, this touchdown, this was like, and this keeps leaking in. It'll leak in until after 4:15. But this is just like today, right? That's 0.55 put call ratio on single stock. Individual stocks, these are the largest 100 traded stocks I'm filtering for right now for options, right? And you see that it's literally 2-to-1. And at some points in today, it was almost 3-to-1, right? And this has been consistent for pretty much the month of November since the election. And when you look at this kind of data, and we pulling in all the different order legs, right? We're pulling it in straight from the exchange, not filtering out for just sweeps per se. This is looking at everything across functions, so multi-legs, split orders, all that kind of stuff. It gives you a pretty clear picture. When you look at that compared to ETFs, like if I dump out ETFs, you can see the ETFs this is about the 5th day in a row that indexes have been bearish, right? Like where you're seeing some hedging begin to come into play, but not at all in the single stock game. And so that is and I noticed this and commented about it and was really touching on it on Twitter the last few days, kind of very sarcastically, a little bit in the juice. I called it radioactive options last night. What happens is, basically, when dealers they sell the call, right? And these are predominantly, when you look at the single stocks, these are predominantly calls, right? Right. So, you can just look through here and all calls. When they sell calls, got to buy underlying security to delta hedge that. It just forces it right on up the chain. That's equity nirvana, right? That's how we get that nirvana type feel to everything. It was the rotation from sector to sector. We talked about that. Now we're back to buying big tech again. We're buying Square. We're buying Roku. We're buying Neo. We're buying Netflix. We're buying Facebook. It's just going from area to area where I'm hitting that call button, buy calls, buy calls, buy calls. When that happens on my phone, right? I'm in on my phone. As that happens and everybody's feeling more confident, and I've seen this effect lately too, then the size of these premiums go up. And I've seen videos, TikTok videos, I've seen different things from across the space where you're seeing young people, $25,000 in like 5 Tesla calls, right? Like huge, expensive calls. Those are pulling that underlying security exchange where they sell the call, dealer sells it, got to buy the security, rolls it up. That is having a massive impact on the actual market as opposed to just sorting itself out, moving from sector to sector. We've seen that. So we wanted to really, and that's been something that's come a long way since March, like really impact the market. And there's some, and Lily's done some great research on this, that going back to like 2017, this really started oscillating. So where options began to really have an impact, which jives with our thesis that 2018 XIV is beginning to see the break in the market structure as before to a market structure after, where the options are driving everything. So we wanted to put gamma exposure, open interest, and executed distribution into the charting infrastructure and kind of lay it at an access that you would get to see it. And we've been working on this for a little bit, and it's in beta right now. I'll roll out probably tomorrow at the end of the day. Everybody that has live charts right now, you'll be able to see this. It'll just be in there as long as you have the GEX and the open interest and executed distribution. If you don't, you can click here and you'll purchase it right in here. But if you have these readings in the market indicators, they'll sit on your live charts. And when they sit on the live charts, you can see these levels as they impact what's transpiring with the options flow. So we were just looking at raw options flow over there in the actual options activity tracker. This is measuring gamma exposure, right? And giving you those levels that are where it's going to flip or not flip. And this is really kind of poignant and pertinent to look across the board at all these different stocks and indexes. Because
when you say it's going to flip, though, you mean that if it was to break that level, then it turns
it's more bullish,
negative.
Yeah, positive and negative. So like if you look right here, it'll tell you like at a different level, like right now, this took back. So GDX took back. We were talking about this. I talked about this weekend. Did it want to get bullish? It could get bullish right here. It was a good spot. It was sitting on VWAP. and it was sitting kind of at the point of no return. If it got down in all this negative gamma
Big
where
trouble.
it was going to be in trouble, right? And it was going to flip, but and really roll. It starts, and what happens is dealers, you know, exacerbate volatility once you get into negative. It's just, I call it the positive trees and the negative trees.
Mhm.
Once you're in the negative trees, it just gets heavier selling and heavier buying. You get bigger range expansion, right? When you're in the positive trees, it's just buy the dip, buy the dip, buy the dip, because everybody's buying the dip, and you get this kind of roll up effect, right? I'm buying the dip, I'm buying calls, dealer sells the calls, buys security, right? We just keep going up. And so when you get up into this area, right, which it's searching to do right now, you're going to get a positive impact. But we kind of added a few more things. This has got our natural order to charts right here, where you've got the moving averages, you've got our fair value gap formulas, you've got you do have the volume profile that sits over here. You can just swap these out. But when you look at this in conjunction with our flows, it's a really good read, right? So you can
Yep.
see that $54. I had said this weekend, just in passing, it's like, okay, GDX is kind of beat up. GDXJ are beat up. They're, you know, looking kind of worn out from a momentum perspective. The flows didn't look good. You know, could bounce. What is that bounce going to look like? Well, it depends on if you get into GEX, right? What does it look like once it gets into the GEX structure? And you can see that it kind of got, once it got over VWAP, right? And or excuse me, the bull bear pivot, that you get into this kind of, okay, it's in green again. And you can see over here on the left-hand side where it tells you the forced bias, the volatility, the current delta adjusted total, the raw share total that dealers need to continue to buy. And then you can see the put call executed distribution and open interest. They aren't clicked over, but you can see them in that key. When you look at this, you see that it's in free flow. So once it's in free flow, that's still, by our measurement, there's a light buy signal, a medium buy signal, and a heavy buy signal for gamma exposure. Then there's a light sell signal, a medium sell signal, and a heavy sell signal.
Where are those signals on this chart? Are you
Those
just saying?
signals right here, if you look in the top left-hand corner of the chart right here, it says free flow, right? Dealer
Oh, yep,
impact.
that's
Yep.
small.
Then
Okay.
free flow, and then forced bias and volatility. That's going to auto read it based on what's going on right here, right? What's going on in the actual structure. And these move as the day progresses. This is going to read it. It's going to recalc it. It's throwing it in here and giving you kind of a very quick visual where you can eyeball it to your right, right? And you flip back with volume profile and look at it. So like right here, I said the other day that when you're looking at this 47, it could go up to 54. 54 would be a pretty poignant level that was kind of sitting there. What would flows do right down here, right? And you can see that they're increasing. Momentum is the last read that we look at from our perspective. It's kind of like the chaser read. Like it gets really crappy and it gets really great, right? It can embed, right? You see it embedded up here and you see it embedded down here. So this is like, if you're looking at it, it's like read 1, read 2, read 3. So then when you're looking at 54 level, you saw the moving averages converge. They're breaking down over the top here. This is sitting, VWAP is sitting right here, and the pivot. So this is a congestion area right here that bulls need to take back. And this is incorporating the options data, right? So we know that we've got the GEX sitting right here at 54, right? Which this one, if this gets rolled over, this will move quickly because it will move back up. You can see there's a lot of convergence between these fair value gaps, these holes in the market that are left behind in the auction, and the levels that are kind of defensed in the sense of where they got to readjust their positioning for the security, right? And so there's no magical formulas here that says that when it gets to 54, it's got to roll over, or when it gets to 54, it's going to keep going. The reaction at 54.21 will be telling, right? The reaction at 60 will be telling. The reaction at 50, right, if it comes back, will be telling. So like we just kind of look at this stuff level by level. It helps you identify, you know, what's really transpiring. I think that this is either, right, going to be can it break up and get all the way up and then come back? That's a question mark right now, right? Will it fail here?
Mhm.
Right? Question mark, right? The flows really kind of help you know whether that's been confirmed or denied. You can see that this has
What
kind of got a fake out right here, right? You
we
called
talked
this,
about that last week.
yeah.
Exactly. What's your
Yep.
volume button? Does it do just today or this week, or what's the time frame?
The volume profile is measuring all the volume, right? For the executed volume at these different levels.
Oh, so it's volume profile. It's not volume of options like OI.
Yeah, open interest is right here.
Yes.
So if you look at
Okay.
open interest, you can see that right here as well. And you
Okay.
can flip it from just puts, right, to just calls or both,
Yep.
right? And look at both. And you can see that total open interest at $52, $51, $37. It's in the frame here on the left,
Okay. So
right?
it cross
Yep,
references to the
yep,
daily, and it's
yep,
volume versus stock versus not the OI for the day. So that's what I'm
yep.
just checking. Okay.
Yeah, exactly. So you got the volume profile for the underlying security. You got the open interest. Okay. You've got the open interest for the options. You've got the executed distribution. So these are executed options. Okay. Right. And you can see those level by level here. And then you got gamma exposure.
How are
So
you doing executed options? Like, how are you using that?
this is more or less to me of versus basis. So if you're looking at this versus open interest, executed distribution really sits in the context of like where does the distribution curve look like right now? It's sitting pretty conjunction with this traded level right here right
Okay.
now, right? And you've got an outlier sitting right up here, right? So it's sitting at $60. So there's some executed stuff here at $60.
All right.
If
Now
you
do gold and silver, just because I want to see. Obviously, they travel as a pack. I had a really good read on gold and silver, but the GDX a little bit less so because it works in tandem so much with stocks also. So I'm curious how you've got silver and how.
Yeah, this was a huge day, a huge day today for silver, right? Like, so, his SLV had a really, really strong day. What's fascinating about this, I was looking at earlier, is this is the volume point of control, been so for a while. It did not breach this. Will it breach this, right? You don't know. If it breaches this, then you got 25, right? And this 23 was left behind back there when it got the fake out. There was some big time the green, yellow, and red.
Option flow was extremely bullish too.
Yeah, it was bullish on I want to say Wednesday. I saw it be bullish last week. I didn't read much into it because it was like crap, right? Because it was Wednesday and Friday last week. Lot of wonky position shifting last few days on light volume. So is this stuff permanent or is this stuff temporary? I'm kind of on the fence on that, because these levels are still pretty uh, not undetermined to an extent for me, because like when I look at this area right here, when I'm looking at this, so you got VWAP that's sitting at roughly 23 32, and then you've got momentum probably going to be spent in a day or so,
Hmm.
and you did not see the money flow and the order flow get positive. Neither got positive right here today. But it is back in a positive GEX environment where it was really faced with struggling down there at 2021, right? About
Okay.
2050. I'm still on the fence as to was that it, right, with a correction, or does all this need to be cleaned up? Really, when you look, especially, and I've been looking at this for a while, and people know that I have been saying this. If you look at this, there's just no order at
Correct.
all right in here, and typically you don't see that go on down the road without at least exploring maybe half of it, to get in there and get some sort of auction going on that. It hasn't yet. Makes me skeptical that this is done, and we're headed higher. But you don't want to ever fight that stuff. And this kind of stuff helps you do that when you're looking at this. That whether you're bullish or whether you're bearish about anything, knowing your levels really help you. If you've got a positive gamma environment, that the buy the dip kind of crowd is going to drive that to an extent, especially with and I've said this anecdotally to people, but have been taken a little bit more serious lately, is that people don't know how to buy puts. Most people, when they first start trading options, they buy calls, especially in this impact where everything is elevated and kind of levitated to an extent with the liquidity that we had since March thrown into the bucket with a lot of people that had never traded. Man, I never imagined hedging. I've never imagined going down. So like the call side buying directly ties back to the GEX structures, which directly tie back to these levels by levels. When we put all this together, our end intent was to put the gamma in here so that you could kind of get an idea of what it looks like directly on the chart, right? And this really gives you levels, whether you're going to buy that dip. It's a good buy so far, buy that dip, right? Long-term buyer, it's still a spec buy though, because you're still under the VWAP, right? On the volume, right, profile. So you're still sitting there and you've still got all this price discovery that really was not explored. So this is spec unless this really fills in right here and this just really flips and goes major positive. So if it did that, you'd be in great shape, I think, with a strong structure, market structure. We really look at it from a market structure perspective versus a signal perspective. Because whether you're bullish or whether you're bearish, it doesn't make any difference really at the end of the day. Everybody can be bullish or bearish, different things. You could be trading bullish and bearish on the same on the same security, doing a different type of.
I do every day.
Yeah, exactly. So like, this is, think of it as it being agnostic, right? But what you're getting is transparent information that's going to give you.
No, this is very helpful because, I approach it differently, but I use this as a tool in the toolbox to see if I'm in, on the right side. And then, of course, the danger levels are the exact same, which I want to show you. So let me just do my.
Yeah, absolutely. Share. Hold on. Let me stop the share.
Okay.
There you go.
All right. So just for giggles, we've done this twice. Make sure you can see this one. Let me know. Can you see the whole screen or just a subset?
We can see the three screens and then the options below it. So
three screens? Excuse me?
It's just the three. You've got one screen with three different.
Thank you very much. Okay, so that's what I want to know.
All right, you got it. Yep.
So first and foremost, when we first talked about this puppy, it was my intermarket read back here, which you can't really tell, but it is the gold miners bullish percent index, which I use as an intermarket analysis piece, in addition to the technical and the macro and all that other jazz. So basically back on August 6th, this reached 100, can't get above that, and then did a double top. So that's why I had initial conviction for a short gold call. And then, you weave in some of the other kind of the backdrop of fiscal getting kicked down the road and such, just inflation really, or is it inflation premium? Anyway, long story short, this was my tell to short. Now, if you look at this is on a weekly, by the way, this is extremely overbought. This is extremely oversold. And once this dropped, and it was the 7th largest gold drop in its history, that sets up, okay, a trend reversal potential, but it hadn't quite rolled over. By many, it was still a buy the dip situation, but for me, it was not. It was extremely overbought and it was coming back down. It broke again. It had that fake out, which you and I both talked about, in the trading webinar. We're like, is this it? And I'm like, I don't think so. I think it's going to go down here. Well, it crashed through and here it is right now, right? So for me, I have levels still below. Now, this is again, bullish percent index for gold miners. It's yet one tell. But I use this again from a technical standpoint to say, hey, we went to the top of the Bollinger Band in GDX. I believe we're going to go down to the bottom of the Bollinger Band in GDX, and that doesn't really show up. But you see my point.
Yep.
I liked this concept of here's a nice price target, and I pointed to the Bollinger Band. I pointed to the Bollinger Band. I pointed to the Bollinger Band. Silver's not there yet.
Yep.
So then I just go to the boring chart. This isn't even talking about macro and fiscal and nothing. No inflation deflation talk. This is just chart. This was one level to beat. So back here in this all risk, all assets got sold, collateral damage, if you will, even during the crash in February and March. Anything that had been profitable, which this was, gold, precious metals, got sold indiscriminately, margin call, whatever you want to call it. And for me, technical analysis includes kind of pivot points from a yearly and monthly levels as well that kind of serve as, if you will, the grandparent, the parent, and the child, different time frames. So it has more power. So long story short, it came down and literally tagged this yellow, which is a quarterly support level. It's also, this yellow is 50-week. Now, for anyone who's not into technical, you won't care. But for me, I know it's going to get defended. It's like a lot of layers of support. Anyway, we shot up through this 174. This is when I got my 100 in that intermarket tell that I just showed you, which is the bullish percent index for gold miners. Long story short, it did fall. And then once it finally, this was the fake out right here, right? When the 10 and the 21 on a weekly broke, I said 174 is the level. And you and I were in the trading room and we're like, we both think it's going to go. Even though the dollar's falling, we think gold is still gonna go lower, move lower. And my piece was back in August. I said I think it's gonna roll over about 15 to 25%, and I got a lot of pushback on that. But 15% is right here. We just tagged it, which is that 50-week again. So this is one of those situations where it comes down to the 200, it overshoots, it comes back up. Or on a weekly, here's the 50-week, which is very much a similar level that you're showing in your GEX. Like, this is, to me, this level, this line in the sand that I think we're just going to bounce back up to this 174 and then fail and roll over to the next level. So you're showing your indicator set on your live charts, and I'm looking at that going, sure looks like my basic moving averages and trend lines.
Yeah, and all we're showing is the data itself. You know, since the options are so impactful to how the positioning has to take place from selling options just outright. If I sell them, I have to buy the underlying to hedge it. Really simple, right? To an extent, you know, that has such a dramatic impact when everybody's just buy side, right? I'm a buy. That all we're doing is just showing that, right?
Yep.
And so it should align up directly with what you're seeing. There's some math in it, right? Obviously,
There's
but
some math in
yeah,
it, and you know, trend lines don't always work and all that. But one thing that I did say in my trading room yesterday, which was this had come right down to what is this big thick red line, a monthly support level, which is where exactly it bounced right back in September, and it did this kind of overarching, I'm going to roll over now. So even though today was a whiplash event, short covering rally, for lack of a better word, or bounce, at strong support, I still have this feeling that we're only bouncing into resistance for gold and silver and miners, and we're going to roll over to the next level. And for GLD, that's 154 area, 155. As shocking, as scary as that may seem, we break that, we head down to the 140 area.
yeah,
So
140. I've been
level
saying that
by
for a while.
level by level. But
Yep.
your GEX is very helpful because I can look at that and I can say, yeah, we're at the same kind of risk on, risk off.
Yeah, absolutely. And you know, so if you're trading it with like let's say you're long, right? And you're long Qs right now. And you're like, you know, I'm just gonna ride till the wheels fall off, which is,
Basically,
it's perfectly understandable to an extent. Now you just need to know where you need to put where is it gonna flip on you, right? Where is it gonna flip on you? You gotta, you're raising your stops or whatever. But to see that level where you're directly gonna know, hey, if this tags this and goes under here, it's going to cascade. Because I said it jokingly today, if it would become national security problem in the United States, if all the gamma call crew became a gamma put crew, right? And they start buying puts with the same vigor that they buy calls. Now it's just an inverse situation where, call, put, right? And that literally would change the whole situation as well,
which is
which
why many don't believe that's going to happen. Yellen, the whole, Nomura and JP Morgan and the rest are like 4,500 is coming. So the equity nirvana train is still at full steam ahead. However, you and I both pointed this out last time. This is just
Yep.
UTP. It's not so much for trading the dollar, but it's for charting it. The options are like okay, but icky. Anyway, the point is
icky.
icky. it has tagged a really key kind of monthly support level where back in 2008, it digested for a while and then moved higher. So at the very least, I look at this, amazing euro dollar pair trade also and think to myself, really, that is impressive, but I don't think the ECB wants them to go too far away from center.
Agreed.
That might get pushed back. We have, the dollar, although it's not, it's UUP, on monthly support. And I would also add, last time when we were talking last Tuesday, this VXX was coming into monthly support as well.
Yep.
So wouldn't it be
Yep.
ironic with this equity nirvana, especially in big tech the past few days, while value took a little rest, we get a volatility surge with a dollar bounce, and tech all of a sudden gets a case of vertigo.
Yeah, I think it's high. I can't see it transpiring instantaneously. I had said earlier this week, well, I think I've just put it out there or probably Sunday night, and then I put it in there last night again, that you're either going to see it kind of blow out the way you saw in 17, where it just continues to grind and then vol starts trailing it, or it just can't digest where it's at right now with these highs, and you see it spiking and fail and spiking and fail and get really
I see more of the
choppy.
distribution.
Yeah, I
That's what
agree
I
with
see.
that. That's what you saw today.
Yep.
It's a very difficult environment to trade, very challenging. And you see volatility start to rise, and then you see, a turn that snuck up on everybody. It really didn't sneak up. The thing that I'm looking for this time that historically have not looked at more so is the call buying fizzle out? Does it fizzle out at all, or does it continue to the last physical moment? Because the ETFs, index ETFs, being as a put call ratio, there's more puts for day number 5. This is 5 days in a row, more puts than calls, right? And the call buying frenzy is I call it under 0.60, is like, I think it's day 11, right? In a row, trading day in a row. That's got to kind of fizzle, right? A little bit to me before, and you've got to see vol really rise up, and you got to see something in the dollar. Dollar just continues to get faded. I think everybody's sitting on these things. So I think I said 5 to 7 to 10 days. It could be anything in that time period, or does it just a magic elixir? I think, when you got gold, the gold bounce today, the silver bounce today, the GDX bounce today. When you look at all those, like, it really is like a kind of dash to the cheap. I'm going to go buy whatever I perceive to be cheap real quick, throw some calls, flips. When do you pay some pay dirt on any of this stuff? I think that's the real question, that, like, what kind of situation that kind of bubbling up and then cracks, that then all that kind of behavior works. I would consider it like, and I was thinking about this last night as an analogy. You got somebody that's totally broke. They're negative broke, right? They're the huge house, they got a good job, right? But it's all going to paying the credit, right? In every capacity. That's fine, as long as the income is coming in and the game is kind of continuing to play. This is not dissimilar in the sense that once that movement is not there and everybody's leveraged,
It's the gravity.
it just
It's the gravity.
nukes it. And
I call it the air pocket.
yes, and you've got huge structures underneath there. That's why I say that if you're bullish, right? Because I don't want to be like a perma bear, because I'm not. I'm really not. I'm building tech products, right? We're not. We're very bullish people in life, but like the structures, you need to be able to identify these option structures so that you can set your stops at the minimum, or profit from downside, or set your flips for the upside. So you can at least identify what's transpiring, because once this goes,
Yes.
this will not be friendly.
So we had this back in February, March. It was a divergence in January to February before it rolled over on the 24th. But I don't know if you can see this. I'm still sharing my screen maybe. The percentage of S&P 100 stocks above their 200-day, 92 it hit. And this is on a weekly. So that's the highest I've got for this particular chart time frame. I could make it bigger. So we're talking back to 2016. The last, that sounds like it's so bullish, but what it actually means is it's a little bit of a steam needs to be let out for it to be staying up here.
Yeah, the further it goes,
It's rolled over.
without some sort of price discovery, the more likely it's not really price discovery, right? Like it's
Correct.
just like going to a flea market and you got people trading for, one person bidding up the entire thing that kills them at Sotheby's, right? Like you need genuine action of price discovery for things to permanently reside. That is not that's scary. And people that are kind of denominating this stuff in like fundamentals or macro, inflation's just going to run away. Okay, I'm not denying that, right? Like it's sensible, right? But what's sensible about what we're talking about? That you can't take that side of the sensible and then ignore the side that's totally, this is derivatives driven. So you got to actually acknowledge that these things that you're showing right here have just some significant impact and some significant signals right here, right? These are really important.
And everyone is extremely bullish with Japan right now because it has been decades, right, since it has broken free into, blue sky to reach previous all-time highs. But even if I take the same type of time frame since 2016, all we've done is go from the bottom of a megaphone to the top of a megaphone. It doesn't mean that this isn't going to be a wonderful, secular bull market in time, but typically when it hits here, it comes back down like a few hundred points or more. Actually, thousands in this case, because it's 27,000 for the Nikkei. So to me, it's just way, it's right now the risk to the upside. This is it's going to be tested very, very soon.
Yeah, definitely. And the signals are the rising vol, the underperformance, and what was the Rona cure trades.
The
And you're
what
seeing
trade? Oh, the Corona. Yes.
the Rona cure, I call it Rona cure day, right? The
Yep.
10 standard deviation Monday.
That was fun.
Those are starting to fizzle, lower highs, and you're seeing all these type of. And it's funny, it's fascinating seeing all the dollars going to zero commentary. And I was looking at that earlier, and I was thinking to myself, the dollar's not even like where it was in 15, 16. Like, where's it? The narrative is fascinating as it relates to what's transpiring right now.
Well, this is the dollar big picture on a weekly time frame all the way back to the 80s.
Yeah,
So
right.
it has a 5-year kind of, bullish impulse, and then it collapses, and then a 5-year bullish impulse. I won't say collapses, but pretty near term, but pretty near to that definition. It rolls over, and it takes a long time for it to get back up. And right now, it is just wandering aimlessly in the desert. But there are a lot of reasons for that.
Well, look at that right there. A 10% move in the dollar to 100 on your chart would do nothing.
Basically.
Nothing to change that chart. That's 10%. That would be napalm in the economy, right?
I know we
right?
judge by every single tick. Oh my God, the dollar just went up. Apple's going to implode. Well, but this is still perspective, and we're still just honestly sideways.
Sideways.
But there is one chart, and I wanted to ask you because you incorporated this new perspective for GEX. Could you look at Russell? Because I'm looking at, as you know, I do this relative strength weakness game, this intermarket thing, and then I pick my favorite sectors within, and I go and look for trading opportunities, right? So we've had discussion with my favorite oil trader, Robert, and Exxon at 32.60, and now the whole contingency just gapped up with the Pfizer news on the 9th. But I had seen that coming just on relative strength. Now what I see in the small cap arena is energy is still lagging. There's still all kinds of room to break higher. This, by the way, is on a weekly chart for IWM. But I want to show this and then have you do your chart perspective, because clearly IWM has broken out. This is gorgeous. It's been the best performing month ever. I mean, 2 months worth of average gains in a typical year we've had with the Russell in 1 month. This is awesome. The Biden bid was the name of my article for clients meets, the rotation, clearly cyclicals, all of that, economically sensitive stuff. Hopefully there'll be real economic recovery. But for now, I'm seeing potential for a fake breakout. I definitely love the strength relative to the SPY, but I think it has to come down and test. Small cap materials, the players within XME in case and infrastructure have done extremely well. All you have to do is look at US steel the past 2 weeks. But there's still financials to play catch up. There's still energy, small cap energy to play catch up. How do you break down in your live charts? How would I find this? Not just IWM, but then within it, small the subsectors, materials, financials, industrials, energy.
So you want to overlay stuff, right? Like not necessarily overlay, but then subsection out, right? Is
Pretty
that
much.
what you're saying?
But start with Russell. Show me like with your GEX levels where we're at.
Okay. Okay. All right.
So take the share.
All right. Whenever you stop, it'll let me.
Oh, sorry. Done. I stopped.
All right. So if you look at IWM right now.
Well,
right,
there's a lot of, okay.
Okay. Very fascinating setup here.
Right? Wow.
All right. First thing I would tell you right now is that flows are still very bullish right here. Okay. But they are starting to taper off. You can see that the preponderance underneath the 177 level, which I kind of denoted a couple of times and threw it out on Twitter and in the app on our feed a few times, that 177.50 is really kind of a line in the sand where you see this thing get really, really ugly. And I think that is in effect kind of tying to your fake out conversation and your fake
potential,
out
potential.
right?
It hasn't done any, careening over, but it's a potential fake out. Yeah.
But we're chasing this up with there's a lot of green bars under here that looks a lot. This is starting to look a lot like silver.
Yep.
Right? Where we're just infinitely going into forever land when we have not really kind of discovered fair value and what that would be. This 177 level better hold.
What
that's
is
all
fair
I can
value?
tell you.
Yep.
What is it, right? Well, you look back at where we were at the end of 2020 as 170, right? 165.
Yep, that's what I have at 170.
We're just like a little bit above where we were a year ago, right? With significant, like what? How much trillions and trillions and trillions? I'm not digging into what all that means or what's going to shake out to be or what have you. They're just this area right here, 155, right? This could stay bullish coming all the way back to 155 because that would be just another higher low in a basic chart, right? Look, but when you look at this and you look at 170, it's really 177, right? Even 178. Yeah, 177.50 better hold. And that's just market speak. That's just structure speak. That's just from the options market. It doesn't mean anything to me in regards to the story or the narrative or anything else. And as long as something, just to note, as long as something has some good options depth where it can create a gamma exposure kind of visual like this, then it will. If it's got wonky, like very, very empty options depth, you're going to get some funky calculation look to it. But as long as it's pretty healthy, you'll get this full breakdown where you'll see it. So I think that 177.50 level on IWM is pretty important, which I've seen in the last week. This has moved up. So the negative environment has moved up based on the way that things are continuing to move. And you don't always see that. You didn't see that in silver. There's a lot of kind of buyers sitting there waiting and how that looks right now. So this is pretty dangerous.
What did you say? 157?
177.50 and then 155.82 are the two major levels that I would say are pretty important, because anything under 177.50 is going to get probably gap pretty quick, like in that kind of move that we typically see in these doom loops versus the nirvana, because it's just going to get sucked through pretty quickly. You could see volume come in, and if you look at the volume profile, that's still a huge gap at 165, but you'll see there is some good volume structure here, some purchased volume structure here in the profile, sitting at about 155. So I think that saying this is going to new lows is like, okay, all right, you know, sure, right? But like saying that this could revisit 155, 156, yeah, pretty fair. And I could see that's where I go back to the dollar. You go back to the volatility. You go back to where everything's sitting, where you were just looking at your relative strength, where it could come back and retest. That would
Yes,
just be this would line up with that kind of thesis that this is going to
100%. That's exactly why I
retest
wanted you to share.
and then
Yep,
go, like retest and go. So yeah,
that
I
would be
think
gorgeous. That would
yeah,
be,
I think that yeah, there'd be
course.
a lot of fear in that environment all of a sudden, right? And all
Yeah.
you
It's
know,
only going to be fear if it really, breaks that lower level, like 150 kind of thing.
I
But
think yeah, 155 breaks. You could see and then how does this start shaping up? Right, this is thinly traded right here, right?
yeah,
Comparatively,
because nobody believes it.
yeah, it's thinly traded, right? And that's why I think at
They
the
weren't
same time,
prepared. They
when
just
you look
weren't.
at this, it's thinly exposed. This is exposed. That's why I've been saying that I think this is a great short. I think this is a
I
great
think the
short.
shorts got caught.
I think this is a great short when it confirms, and because it can move pretty quick, it always does. But we'll see. I think these levels are really clear throughout the charts. Like if you look at QQQ, same kind of thing going on. Really bought like in this area, 275 is holding, and then if you look at Gamma, um, it's up tight, 294, right? 294.22, 294. That's kind of the top revisiting. This is effectively like, the same type of thing where it could get down, retest it. Does it get to two? But see, Russell's got a way more room in it to, in my opinion, to hold, right, a bullish stance, whereas this has 10%. This can move 10% in 3 days,
Mm,
right? So like this is kind of interesting to me because 274 on this level for the Qs, if that doesn't hold, then that breaks the market structure where the higher lows are broken. And that would then bring in the fact that 274, that there's a lot of this is that same effect. You look back to 2017 where it just kind of kept grinding higher and never retested anything. And you can see that, that's why 182 level, 210, 180, 210 to 274, this whole area in here, Bulls don't want this under 275. I'll tell you that. And that I go the same thing for the Russell. They don't want it under, what is that, 155. Like there's some really, if you use the charts, you can see these clear as day. Like you don't want it under here. Bulls want it over here. Bears want it under here. They can flip it on top. And this is why to us, the volume and then the options make such a difference in the whole thing, because once the weight of the market, whether it be options or whether it be just executed shares, right, over time, once that flips on something, either way, right, it runs and it goes and then it starts to exacerbate. The only difference is you get a grinding up move with the Nirvana, and you get a elevate. So escalator, elevator, and the elevator is because of the impact of the dealers as it relates to put buying once it starts. So
okay,
I'm not seeing anything yet to
well,
tell
let's
me
let's
this,
look at
right?
Neo, because Neo had a very special character to it, which was unrelenting call buying, and now this is weakening in price, but they're still buying calls. So I want
Well, yeah, it goes back to people don't know how to buy puts, right? I'm buying
they're
calls.
still buying calls, and it's like it's done. Let it rest.
Yeah,
But
well, it's
they're
not
still
gonna die until they give up, right? So
basically,
when you look at this, it's really straightforward, right? Like you've got some chop in here that took place in this 40 to 55 area, pretty decent volume,
yeah.
but the bulk of the exploration is down in the 10 to $20 area, which the volume profile or the volume point of control is like $10 and then $18. $21 is a huge gap. This is not dissimilar to some of the stuff you saw in the 2000s where it
Oh
just
no,
gets
it is very similar.
it
Absolutely.
where it just got really carried away really quickly. And so I have not looked at the gamma exposure for this, but there it is. It's already in the negative trees, it better be careful.
Ah, it's in the negative trees. Thank you.
Yep.
Okay, now
And
do Tesla, because I still see a potential for 3,500 pre-split, and yet I can't, the China Tesla Neo is starting to succumb to some gravity. Whether
yep.
they actually turn tail and buy puts is another matter. But obviously, Tesla is still the love child.
Yeah,
So
the last thing I would say on Neo is you can see that flows are already, this is all starting to step down,
yeah,
right? Momentum front runs it and it's starting to step down. These are big sell bars on a daily perspective. So this is, bounce, that's looking like it could
that's another reason I'm also short. So I want to see.
yeah.
Now,
Tesla,
when is it time here?
Tesla. I don't trade Tesla. I leave that to Ross Gerber, right? I don't trade Tesla. This is like
No, it just means your mom and dad taught you well. Don't
the
fire. Why put your hand in the fire like you just figured it out early? That's all it means.
yeah, right. So you're up here. I had read something this morning. I had to dig into this a little bit. The inclusion into the S&P can cause some wonkiness
Wait a
to
minute,
take
we did
place.
this last week.
Yeah, you
No,
did.
no, no.
Yeah, that's right. Okay.
Okay, so we talked about this at the top of the hour, and I said, my call was it's going to 500, and then after it gets included, and it's going to be hard to digest, that market cap, however they do it. I think an offering, but there's lots of debate. I have no idea, but nonetheless, it went to 500, not less than 24 hours. It was one of those millions and millions of call buys that came in the next morning. We talked about this too.
Yep.
And it was 498 at the close.
Yeah, and it's now it's almost 600. So I look at this and you can see that the flows are still coming in, but the size of the transactions starting to dissipate on the large side. So these are large transactions, the power blocks. So these are tracking big transactions, and kind of aggregating them. So what do they look like if they were all added together? So those are starting to leak. Then you're starting to see flows leak a little bit, but not, they continue to buy the dip. And then you look at the volume profile, it's still sitting around 400, 425 is the major acceptance. These gaps, again, this is kind of like silver, right? Where you wonder at what point, if ever, did these things get all cleaned up?
Yeah.
And when you're in an environment where nothing, it's safe, it's a safe environment, things are fine. You can't imagine that. But when it flips, just look at those levels and go, okay, I had said 162 in gold for a while. You said it's a level. It's just there on the chart, right? It's just there on the chart. And if you are looking at it from a narrative, you don't think that, right? You would never think that. I say 167 on Tesla. People are like, you're the antichrist, right? Like, you're against progress, or 241. These are things that are just sitting out there still, that yet to be determined whether those are accepted or not, because nobody ever bid on them. And that will at some point in time in the future be sorted through. 400 could very well be sorted through. I've seen some like 30-something% drops on different signals for this. It's pretty consistent over the last couple of years. That would just simply get you to that kind of retest level.
I wonder how many people are going to be positioned for that, and then it doesn't happen, but versus it happened right out of the chute the next day we talked about it. It was ironic. I mean, when it did split, it dropped a good percentage. I forget what, 26% or something. But what does it look like for GEX? Yeah, that was the level I'm looking to also.
Yeah, this is really, really, really full. Let me see if I can get this to put.
That'll be our last one because it's already 5.
Yeah, it's really thin here. I'll darken this up, but you can see that it's kind of dark. Yeah, it's green. It's called, yeah, there is just not much negative gamma until
is there any?
Down here at 432 level.
No kidding. Okay.
Yeah.
Well,
And so it's really yeah, we'll see. It's just hard to see. We were messing with that in Amazon the other day, trying to fix in the way that these appear. So
well, the other ones were fabulous. I just can't, it's a little faded here, but thank you for showing that, because obviously everyone is curious how this is going to work as far as the absorption of Tesla in the inclusion, if you will, on the 21st.
Yep.
I've read both sides. I had a position, that it would go higher after the announcement, and basically, buy the rumor, sell the news. But now everyone's looking to sell it. I'm looking at Neo going, okay, price is definitely softening, but they're not buying puts, like you just said. That's almost a sentiment call, Jonathan. From your quant work, you have made a sentiment judgment that they just don't know how to.
I don't see it. There's no puts. Where
And
are the puts?
exactly where the puts with Tesla, it was so faded they couldn't even see it. No, but the point is, I agree with you, and so it'll be very. It's not there yet, but this was very helpful to demonstrate, because like I said, I share with my clients your daily juice. I think it's just very informative and educational, and look how it just totally overlaps with my kind of analysis of the intermarket and the technical. And we also love to play on the macro side, but ultimately we're really following the option and the structure, the market structure for trade execution. So it's very helpful. I want to close and basically do a quick, sorry, my thing is going off, a quick announcement that Thursday, I'm going to have Sanglucci on, and he's better. He's cured. He had COVID. We had to cancel last minute, not last Thursday. That was Thanksgiving, but the Thursday before. We're kicking off our Women in Trading and Finance series. I'm very excited about that on Thursday. And then we're going to take a little break. And Bob, my oil trading friend who came in a few weeks ago, who is the best trader in oil, he is going to be coming in and revisiting his themes for 2021. The stranded assets theme, if you will, in the oil and gas space. Direction of oil is a forecast, but specifically, how is it going to shake out with our? He's got his themes. I'll let him present it, but that will be next Thursday. So sign up. Let me just do this real quick as to where, and it's somewhere. I've got an it here. All right, so definitely subscribe on the YouTube channel, please. You'll get also alerted when this closes. We upload it to YouTube, so you can see a recording. You can also go right to my website, and under public blogs, here you go. Guest captain interviews are right here. And you can see the upcoming interviews and also past interviews. So after Jonathan and I hit end meeting, it will literally be recorded right here. Last week, I screwed up and forgot to hit record, so there is none. Well, no, this is today. Sorry, this week, there is none. It's only 1 minute, but we got one today. I'm excited. So Jonathan, thank you so much for sharing the work that you have developed. And we'll talk more about the stuff that you're working on as well for my indicator sets for LaDucTrading.
Yep.
I'm excited about that. We'll announce that separately.
Okay.
Any closing thoughts on market? I think we covered a lot, and especially the tools, which is really helpful.
Yeah, no, I'd say everybody check out the tools. They'll be in the live charts, the game exposure and the options, open interest, and the executed distribution all be available by Thursday morning. So those will be in there Thursday.
Yay.
And then as to relate to the markets, I would say the four things I talked about last night. What does vol do? Does it move? Right? Is it gonna grind? I'd like to see it rise with the markets. Internals. Are they going to roll? Or are they not? If they stay strong, it's just going to keep going. And then, you're watching the Russell, right? Is it going to roll? Because it can drag and lead and kind of be a signal. And then is our dollar going to do anything? Or is it just
going to do anything?
Or is it going to go in the Fields Museum with all the extinct dinosaurs that I saw when I was there that one time?
And then what happens to gold and precious metals, because they've fallen together?
Right. I don't know. We'll see. But we're at an inflection point. You got to let it roll a little bit. So we'll see. We'll see what shakes out next few days.
All right. Thank you. And see you next Tuesday. Take care, everyone. Thanks again for joining. Good night.
Bye, everyone.